Welcome to Profiletraders. This is Reza and you're listening to my market analysis for November the 12th. While we are looking at this chart of ES, what we saw here in the middle is few days of a consolidation with a very slow grind to the upside, and then finally last night we did break out of that whole consolidation with a close at the very outside of the range of that consolidation's bottom. So this was clear-cut indication that finally there was some reactive selling coming into the market. And then today, after a horribly confusing morning with a back and forth and back and forth and back and forth, finally in the very late hours of the session we started to take a directional nosedive down with a close at the very bottom of the day's range. With these two sessions back to back decisively closing at the low with lower low, lower highs, one can definitely conclude that this is the beginning of a potential down leg, which was very much so overdue after a 250 points non-stop rally to the upside, all of it based on hot air and nothing of it backed by an improving fundamentals. Therefore, we have started now a drop and a correction of this leg, but all this has been doing now is that it is going to create a gigantic trading range that could potentially go to 1836 all the way to 2120. And the sad part is that we again came to this top here and we were unable to push through it in order to clean it once for all and then start to come down. So with that top being left again unchallenged up there, it makes the trustworthiness of this move down suspicious, because usually clean cut tops are tops that would break first and then reverse and come back down. But when you have several attempts, like here 1, 2, 3, today 4, that's a quadruple top. Of course it can create a reversal from it, but usually they're at some point tested and broken to the upside so that we don't have a quadruple top like that anymore. But in any case, 250 points worth of a rally on hot air coming out of the behind of Madam Chairman of the Federal Reserve. If it wants to retrace some of it, it could very easily drop towards 1950s. And after dropping to 1950, it still have not done anything really bearish, because the bulls then would agree that it will be the touch of a existing and in place uptrend line, and from that point on we could come back up and attack the high again. But that we don't know yet. All that we know is that based on these two sessions back to back, very clear cut drop with a close at the very low, market is in a short term bearish trend. In terms of first resistance of significance, we do have 2048.5. After that we will be targeting 2054. After that 2060, and if 2060 is violated to the upside, most likely we will go towards 2066 and then a POC up there at 2073.5. On the way down, I do not have anything of substantial before 2010 and then after 2010, 2000, and 1985. So between tomorrow and possibly end of the week, if this continuation down follow throughs, we should be looking at 2010 or 2010. As for crude, it is also following the chart of pretty much every commodity that you're looking out there, from crude to gold to you name it. They're all crashing down, which is a very concerning thing, because it is giving us a completely different story than what the stock market is telling us, which is basically these commodities being very close to the very recent low that they have made, while the market is at its almost historic high. So one may question that how can economies be booming when the demand for a raw material such as crude is dropping and shrinking so fast. So one of them is not telling the same story than the other, and they're contradictory with what is going on with the market. But a paper from Priceline can very easily be manipulated by the pigs of the Wall Street and make it go up to 15 or 1400 or whatever price it was before it dropped 150 points. But commodities like that, you can't lie about it, and it is showing weakness across the globe. And in terms of what should we expect from here, we need to look at our daily. We did break out of a trend line that was setting up these two lows from here and here, and it did break out of it with a very conclusive break on the downside. Therefore, if I do one thing, which is taking the measurement from this last leg down and then project it from this very recent top that we have here, it is a possibility that the downside objective of this drop will reach 39.5, and then it will make very much so sense, because that from that point on we will have a double bottom, and at 39.5 probably the mullahs and Putin will get so pissed off that a major international event will happen at that point to create a rally. Any given time that we reject back and close above 44, this break of the trend line is going to be negated, and we should see a very aggressive short covering coming in. But we are far away from 44 now. Right now everything looks pretty darn bad and very weak. First level of resistance comes in at 42.20. Second level of resistance will come in at 42.55. Third level of resistance 43.16. As for the downside, we need to monitor, because let's not forget now that we have a very much so a $6.70 points drop, pretty straightforward from the last time that we were at $48. So from 48 to 41.6, we already have 6.70 drop. I don't know how much more there is into it, because this is also one of the commodities that when price starts to drop, it automatically creates excess demand, because then all the crazies jumps into their 250 and 150 trucks and then put the foot on the pedal and accelerate like if it's no problem whatsoever, because they don't care, because crude is cheap, makes gas cheap. And then as they continue to accelerate like crazies, all of a sudden demand goes up, because people don't care, price is low, and this excess demand that comes in from excessive price being low, all of a sudden makes price go back up because of cheap price creating excess demand. So one must be very careful with oil to be on the short side from these levels. As for gold, this classic loser that is being destroyed by this invisible hand that is doing every single thing that it is possible in this round planet to make sure that good fundamentals or bad fundamentals for gold is killed and punished. We had a crash of 110 points straight 110 points straight down on this last leg down, and now we hit the double bottom, and that same aggressive buyer that created a little bit of a rejection down there created the same thing this time here. Now, can this be trusted, yes or no? In my book, it can not be trusted at all until I see price going back above 1100. Until we are below 1100, we are either going to continue down, and it would be a fantastically fabulous thing for the manipulators to take this thing another 80 points down just for the F of breaking 1000 and see what kind of reaction they can create in terms of price chaos. But if it's too expensive to break 1000, then no one can argue that we are at significant support now, and at no cost whatsoever we should see a price drop below 1070. That is the line in the sand that we must not break. Until we remain above that, well, 1091.5 is one target, and then 1100 is another target, and I do not dare project above 1100 because it would already be a fantastic miracle if we can go back up to 1100 again. This was Reza with Profiletraders. Thank you for listening. If you wish to learn market profile, you can get all my courses and a year to my trading room for $550 money back guaranteed. Have a great evening.